Good evening, everybody. So I usually like to start out with a quick wrap up of what happened in the market today, what we saw, and we definitely saw some manipulation, but I'm going to do something completely different tonight. Tonight, I'm going to talk about examples, real life lessons on how or what you're seeing in the market and what to do when you see these things occur. So I've got a bunch of slides tonight. I'm going to talk about each one. I'm going to let you know what you're seeing. I'm going to let you know exactly what I would be doing in the same situation. So the next time you find yourself like, oh, the market's like falling, what do I do? You're going to know exactly what you do. Okay, the way I teach is through my platform, which is 349trading.com. All right, nobody's ever forced to join my platform. The whole premise behind my platform, it's only $3.49 a week. You can quit at any time. It's just a 1-week payment. I'm just trying to get my message out to the masses. Everything I do is organic, meaning I don't spend money. I go on YouTube. I share information with you. I go on Twitter. I share information with you. I do have a platform. It has my rules, my lessons, my philosophies, psychology of trading, what to look for. It has my spreadsheet. All right, so let me just jump right in, and we'll start with some slides. And I'm going to share with you guys exactly what we're seeing, and we'll go from there. So the first slide, just going to talk about what I've been doing. So since my platform started the beginning of March, I've entered into, let me just see here. I've closed 12 trades, stock trades. I've been 11-1, 11 wins, 1 loss. There you can see it in red. All these spreadsheet is available on my platform, on my app, okay? There are 25 open stock positions. So it's not like there are stocks that, aren't there or something like that. You can see my open stock positions. You can see my price targets. You can see the profit, the potential that my price targets have to hit and the gains that are associated with that. With options, okay? So I've traded 34 options. Let's go on to the next slide real quick. Anyway, I've traded options. So you can see most of my options positions are green. This is, again, since March 1st when I started trading transparency and started my platform and had a Twitter following, or maybe you found me through Instagram or Facebook or Webull. I don't know. The good thing is you're here, and we're not going to talk about this. These are all like educating things. I just want to say the proof is in the pudding. My trades are profitable. So 24 option wins in profit, 10 option losses, and 5 open positions. So with my stock trades, I'm 92%. With my option trades, I'm 72%. These are the alerts I make, okay? If I get involved with the position and it's not an alert, I'll tell you it's a transparent trade for my own account. But if it's an alert, I feel very positive about it. Let's go on to the next slide. So we're going to talk about what we're seeing today. Just to tell you real quick, institutions are having so much fun with you guys. They're having a field day. The way they are manipulating the market, I'm going to speak about that a little later just to tell you what we're seeing. But they're having a field day. Pre-market this morning, so I sent out an alert this morning at 11:05 telling you, I do a video and I tell you what we're seeing in the market. So my market video was basically saying what you see between now and the end of the day doesn't really matter. What's going to happen at the end of the day is the Dow is going to be up, same as it was pre-market, and the NASDAQ will be up similar to what it was pre-market. Now, I'm not sure if that's how it ended. I didn't really catch the end of the day. But the point is, I know the Dow is plus 200. I'm upset that some of my positions personally did not move with the Dow, and I'm going to speak about that. Let's go to the next slide, please. All right. So Delta Airlines is one of my favorite plays. This is a chart that I looked at a few days ago, and I decided there was going to be a third peak, okay? Just to show you guys what I'm seeing. Now, the hesitation that we're seeing right now, I mentioned this at 46.21 is when I noted it, but I think the stock is still like 20 cents above that. Again, that's not killer, but what is killer is your entry point. And I have a slide coming up to show you about entry point. Again, we never chase stocks. We always look for sales and things of that nature. Let's just go to the next slide. They're all revolving around Delta right now. So again, here's just the Delta chart. All it's showing you right now is that Delta is hovering in this mid-range. But if you look down to the bottom where the bars are, where you can see the volume, please notice these past 2 days or 3 days that I expected Delta to move to the upside. Volume's absolutely dead. You can see you hardly even see a bar. So volume's been dead these last 3 days in the market, which is why it's been so volatile, from up 150 points to down 20 points, back up 200 points. Some of your stocks aren't moving. It's a very select few stocks that are moving the Dow, that are moving tech. So don't be alarmed. If your stocks aren't moving, it's not because there's no demand. It's just volume is so light. And I'm going to point that out to you. So let's go on to the next slide, please. Okay, So here we are again, market manipulation, very light volume. Okay. So they took Delta and they said, you know what? We don't want airlines. We don't want the market to be up. We're going to sell off. They sold off once. There was a second dip. The institutions, the ones that are playing with you, let you think that the market's recovering. That's why they let it recover for about 30 minutes. If they are selling their positions, right, and going to take down the stock, they're going to let it go up before they push it down again. That way they're making more money. Okay. Institution rule. If something's tumbling down, they're not selling into the market that's going down. They wait for you guys to think that there's a recovery. Everybody wants to be first to recover. Meaning, when you see a stock turning the corner, you jump on. I know some people jumped on. I jumped on Tesla option this morning. I ended up making some profits. I'll talk about Tesla really quick. Let me just remove that slide and then we'll go on to the next one real quick. Okay, so let me just talk about Tesla real quick. So Tesla options, I bought my first position today at $1,300, at $13 per contract. Then it was going down. I bought my second contract at $7, and then I bought 2 more contracts at $5. So all in all, I had 4 contracts. I was in for $3,000. All right, the stock spiked towards the end of the day. I set a sell position for $9, a sell order. So I got $3,600 back. I put in $3,000. I got $3,600 back. So what am I telling you? I'm telling you to plan ahead. There's a right way and a wrong way to average down. I guessed the bottom on Tesla. I was wrong, and I was substantially wrong. But it wasn't a losing trade. Rather than watching and being upset that I guessed the wrong and Tesla's still going down another 10 points from when I saw the bottom, I decided what I was going to do is pick up another option. So now it's 2,000 in. And when it dropped more, I said, it could still have a good balance at the end of the day. I don't know if Kathy Wood or other people are still involved with Tesla, but they could be buying at these prices. And lo and behold, they started buying. I got $9 and exited out. So I'm just going to tell you SRNE right here. The other day I said zoom out. There was heavy demand. And the last 2 days in the market, SRN, the volume's been so dead. So I had to tell myself, zoom out. I'm upset it didn't go up today. I'm upset it didn't go up yesterday, but it lost 20 cents yesterday. I think it lost 11 cents today. The markets were brutal in some cases. So if there wasn't demand in this stock, it probably would have pushed down to $8 or under. So that's a very positive thing. So I just want to teach you how to read stocks and what you're looking for. Again, if your stock tends to pull back, and I'll use XL for an example, right? It might spike, and then after hours, they just give it all back. If that happens every day, your stock spikes, they give it back after hours. It's not a strong stock. There's no real demand. But volume was so light here. Let's just move on to the next slide. Again, I'm going to try and give these lessons pretty quickly. Here's a lesson about planning ahead. So this gentleman knows that I was in Delta Airlines options. The option was, I think, $1.30 this morning. And then it went down to like $1.08 or $1.09. He missed it. He told me, oh, I came so close. I missed it. It went back to $1.40 or $140 per option. And then the market tanked and Delta went back down and he bought the position. So it's all about planning ahead. So most of you, or let's assume the majority of you have jobs, or, you know, you're teachers, or you're going to work, or you're a doctor. I know there's some doctors, or you're in a different time zone. So you can't stay up when the US market's open. Plan ahead, meaning pre-market. If you want to buy something, you set your buy limit real low so that if the stock spikes down at any point during the day, you purchase. Now, what my followers tend to do, and what I would like to do, or what I do like to do, as soon as I buy an option, if I'm planning on selling it for a specific profit, I will put in the order right away. Meaning, I buy an option, I spend $100, I decide that 30% is good profit. So as soon as I buy a $100 order, I then put in an order to sell it for $130. Now, I don't really care if it goes above, beyond, back, forth. I don't care if it takes 5 minutes or 10 minutes or 5 hours. As long as it crosses over the target that it needs to, my option's going to sell and I'm going to secure the profit. So rather than watching Tesla, I was watching Tesla inch up and I was going, you know what? I better plan ahead and put in my price to sell these 4 options, because the last thing I want to do is get caught if it goes back down and have my options worth 0. My strike price was 680. The stock was still under 680. Or no, it was over 680 by a little. And then it retracted back to like 677. My options would be worthless if today was Friday. The point is, get rid of it when I'm in profit. All right. I did have a bad trade today, and I will share that. I'm going to talk about what we saw as well. Let's go on to the next slide, please. It's all about being transparent with you guys. I can't teach you unless I show you the good, the bad, tell you guys what the problem was at any certain time. And hopefully we can all learn from it. And there's no such thing as instant gratification. If I like something, I'm hoping that it changes. I see demand, I see the volume. So anybody new here, that's what I do. I see demand, I see volume, and I see patterns, and I share that with you. And then I try and teach you how to see those same patterns that I see. So let's just see what Farah wrote. Just wanted to let you know I started trading options this week. Okay, she went on her own with Roku, which is a stock I like, but I didn't give an alert. Okay, so she set a high limit. So she sold her position pre-market. She put in a pre-market order, good till canceled. That's what GTC means, good till canceled, meaning you place an order, the order sits out there, okay, in inner space or outer space or the cloud or wherever it is until it's processed. If it passes your point, your purchase buy, you'll buy it. Or if you have an ask price, you're going to sell it. So she crushed it today. That's great. Let me just get to the next slide. Let me grab a sip of water. We don't do any editing here. There's no cut. I do everything live. I'm trying to share everything with you. Tonight's all about lessons and just these little lessons. If you want more comprehensive lessons, they're on my platform. They're on my webpage. I tell you my rules, but I give you a lesson with each one that tells you about a life experience and how this happened to me and what I did or how I reacted. So real quick, Sarah mentioned this morning, she didn't even know yesterday was red. Now, what is she mentioning that before? Because I made a prediction yesterday that we would see green today. So far in April, we've had 2 days where it's been red, but there's never been 3 days in a row. Okay, so the last time we had 2 days in a row, there had never been 2 days in a row. So I was surprised there were 2 days. The third day was that Friday when it spiked and we all made a ton of money. Okay, with that said, we had 2 more days in a row. So yesterday night I came on and I said, tomorrow's going to be green. I'm sure of it. I'm 90% sure. Now, these are the institutions that played a game with us. They totally messed with the market. They sold it open. They let it trickle down. They let the retail traders buy it up, knowing that it would be at the lowest point later in the day. So they weren't buying. They were probably having brunch, laughing at us. That's what they like to do. I mean, I've said that before, and it kind of sounds silly. They don't actually sit in their office going, ha, ha, ha. But they're always thinking about how to make money and how they're going to make money from 30 million to 50 million new traders in the market. Okay? That's what they're trying to do. They siphon a little from you, a little from you, a little from her. They siphon a little. Anyway, so Sarah didn't even notice because it's about making your best position. It's about entry point, having a strategy, making sure you get the most return, and then moving on. There is no emotion. I think I have a lesson about that, maybe a slide later on, but we leave emotion at the door. What does that mean? It means you don't stare at your screen. You don't get upset. I got a little tilted today with my carnival options. I couldn't understand why it was going down. I was sure the Dow was going to recover. The Dow recovered 200 points, and yet my carnival options did not recover. So I'm a little baffled. I'm still figuring that out. I'm going to get to a little explanation soon. Let's go on to the next slide, please. All right, Blink. Again, this morning, I almost got max value on these because I think the high price of these was like $2.80. The point was I saw the market going down a little. I had a Blink position that returned over 100%. I said, okay, it didn't pop like I thought it might. I held it overnight because I thought Blink might pop to like up 10% today. And they were talking green energy, Biden, plug, all these charging stations, infrastructure. Okay, fooled me. The market knew what to do. They started selling off as soon as the market opened. I caught wind of that. I sold my Blink. I was pretty good with my Dow stocks, but I sold Blink because that was more tech-related infrastructure. Plus, green energy has been beat up. I mentioned another green energy stock, CSIQ, Canadian Solar. It was my favorite up until a few days ago when I sold my position. And again, I leave no bag holders, so I speak about it a lot. I tweet about it. It's on my platform, and I mention it that night and probably the next day as well. The point was at 46 and change, I thought it was getting a little frothy. There wasn't the demand. I wasn't seeing what I usually see. So I sold. Now it's back at $44, maybe in 43 and change. There's no need to lose 10%. If you see something going down, you don't have to go down with the ship. If you're worried that you made too many day trades and that Robinhood or Webull or another platform is going to mark you as a pattern trader, here's what you do. Take $200, open up a second account. Do it right now. If they mark you as a pattern trader, that's okay. You don't want to lose your account. If you have $2,600 and the deal is you can either sell and get marked as a pattern trader or lose half of your money down to $1,300, guess what? Be marked as a pattern trader. Save the $1,300, get a new account someplace else. Wait the 5 days, wait the extra 2 days to settle and 3 days for your money. Wait 2 weeks. The world's not ending. Just like casinos are always open, the stock market's always open. And right now, I'm going to get to it, how the market's manipulated. But the volume is so low right now which makes these volatile swings and is easier to manipulate different stocks. Whatever stock it is, I could easily see walls going up. And we saw that on Carnival today as well. And I'll explain that in a bit. Let's go on to the next slide, please. All right, Farragon, you all need the platform. Yeah, okay, so anybody new, please just take a second, read this. I think we have one more slide like this. These are just people's testimonials. Again, there's no guarantee. Here's why I'm here. The platform is here for two reasons. I'm here to simplify and level the playing field. I used to work for institutions. I talk about that in other YouTube videos. But please understand, I'm here for you. I'm here to give you value, give you content, make you smarter. If it's just YouTube that you follow me on, please subscribe and push the notifications. That way you get to see all my videos. If you're on Twitter as well and you see my tweets, that's great. Again, congratulations. I hope you're learning something. Now, if you do the full 360 and you join my platform for $3.49 a week, which is like 50 cents a day, all right, that's the full Monty. You're getting it all. You're getting my alerts. You're getting my spreadsheet. Say you're at work, you can't get tweets or anything like that. You go to the spreadsheet. Did he make any new positions? All my new positions are always in yellow. So let's just talk about that real quick. Why haven't I given out that many, alerts this week? Because the market's been crazy this week. I gave one stock out on Monday. I gave 3 stocks out last Monday, all profitable. 3 stocks the Monday before, all profitable. All right, I'm at 11-1 in my stock trades since March 1st was when I started keeping tallies, when I started this following, when I decided that I wanted to change people's lives. Whether you're a school teacher or you're a mechanic or you're working like an oil rig, because I know what some of you do. You tell me. Let's change your life. It doesn't happen overnight. That's the whole thing. The premise is it does not happen overnight. If gurus and other people tell you you're going to change your life overnight, it's not true. It's small piles. Okay, one of my followers has a husband who's saving up money for a tattoo. He started with like $100. Then he was $200. Then he was $349. I said she better watch out because he'll get his whole body tattooed. That's how much money he's going to have. Small piles become big piles. Let's go to the next one real quick. Okay. Somebody completely agrees. Yeah, 349 is great, for my platform. Please, I don't want to stall too long. Let's go on to the next one. I don't force anybody to join. So that's the whole thing about my platform. I don't force anybody to join. I make it affordable to the masses. The whole reason it's 349. You want to get my vision? My vision is there's a few 100,000 of you that want to be better traders. If your friend wants to be a better trader or you hear something dumb, they're buying the ask. Tell them, be a better trader. Follow this dude. I'm going to help you and your friends out. You guys are going to have more money. You ladies will have more money. I don't care what you guys do with it. I don't care if it's for kids, for food, for rent, for anything like that. I'm here to make you a better trader. There's one premise behind that. So I watch some of these other gurus or these videos, and they're talking about a specific stock or this stock or that stock, how it's going to go up. They don't know why it's not going up. They unload their bags when they're talking to you. I don't do that. I'm trying to make you see exactly what I see. So when they're saying something or you hear something, you don't jump in. Somebody tried to tell me about a stock the other day. Oh, yeah, they have big news coming up, big news. I did my research. It did not make sense to me, and I stepped away and I said, thank you, but no thank you. All right. At least 2 people on this platform already commented they didn't know and couldn't buy the same day and their accounts were restricted. It's better to help them out beforehand. Okay, sure. I mean, I told you guys, and again, it's in my platform. You should have like 4 accounts open. I have 6 accounts open. I have an account for long-term stocks, short-term stocks, fintech stocks, for options. I have a retirement account. And I have one other account with like dividend stocks, but I don't even check in on that because I don't like dividend stocks. They don't move fast enough for me. Thank you for leaving my losing play on the screen, the biggest. So Carnival, again, the Dow. No, please put it back. Put it back. I like to share. I share in transparency. Okay, everybody learned from my lessons. I saw Carnival was getting rocked. It was 32 cents or $32 per option. I was like, I'm going to double down. Not only didn't I double down, I went like 4 times in on it because I was so sure I was going to be right. I've been on fire lately. Everything I call it just spikes, and it almost looked like it was. And then I saw somebody take the other side of Carnival, and they were pushing it down and they were moving the walls down. And I couldn't understand why because I saw the demand there. Let's go on to the next slide real quick. But it happens to all of us. I thought I was making the right decision. Hey, Carlos, can we go on to the next slide? Thanks, buddy. All right, so here's the thing. Large institutional buys today dwarfed everything else. You see those little split. They bought 7.7 million shares today. It's like $150 million, right? $160 million. They were buying. But the thing about institutions is they don't push up the price. When you see the price go up and there are huge spikes, it's not institutions. It's somebody with inside information. It's somebody that's trying to manipulate the stock. You see that all the time. And yesterday and today, there was such low volume. 3 days, 3 days since Tuesday, such low volume. No wonder it's been 2 red days and 1 green day that didn't make sense. Today really didn't make sense. Dow is up, but Dow stocks aren't. Anyway, you could see the demand in Carnival. So anybody that's smarter than me, and I'll say this real quick, smarter than me because I got risky. I broke my rule. One of my option rules, and I'll give you them real quick, okay? First option rule, only buy on dips, same as stock. Second option rule, we wait till at least 10:20 or 10:30 a.m. when the spreads between the bid and the ask price narrow. The bid is what you're willing to pay. The ask price is what someone's asking you pay, okay? And then we enter a 25% rule. So if you have $1,000 to spend on a specific position, you buy $250 worth of that option. Unlike stock, when stock goes down 10%, we know exactly when to double down or buy more stock into our second position. But with options, your option has to go down 40 or 50%. Now, let's say for Carnival, example, which expires tomorrow, if someone got options, any options that expire the next day, all right, you don't have time to average down. But if you want to support your position and you think the stock will go back, but maybe back not high enough for you to make money on your first position, you buy a second option that's more in the money. So if I were to average down on Carnival at $27, I would have bought a $27 option. In fact, that is what I should have done. And I feel stupid talking about it to you guys. It just shows you how transparent I am. I know now what I would have done. So this is the lesson. This is what I'm trying to show you. I'm showing you my slides. So you say, next time I know what to do. Okay? So again, I know what I should have done. I should have averaged down by buying the $27 option, not the $28 option. That way, if the stock jumps 60 cents tomorrow, the option that I averaged down with will probably jump up like 100%. Whereas my other option at $28, might be only worth 10 cents. And if I paid 30 or 40 or 50 cents, I'm losing like still 80% of my value. So if I can make 100% on the one that I averaged down on. So again, anytime your option's out of the money, I'll just give Roku for an example. I used to own these $380 calls. The stock was $350. If I thought Roku was going to go back to like 370, which I think it's close to now, maybe it's in the 360s, I would have bought a second option, not at 380 because it was 380 when I purchased the option the first time. I would purchase the second option at 360. So if it goes up to 379, I'm I'm making money on the 361, whereas the 381 still didn't get hit. It's 379. So worthless 100%. When you average them out, again, so my options, I have 24 wins on my spreadsheet, 10 losses, and 5 open positions. Of the open positions, 3 of them are Delta Airlines, 1 is SRNE, and 1 is TRIT. So TRIT, you know what? Let me just go on to the slide. I'm going to talk about that since it's another lesson on how to improve your position. Okay, so here we go. Leave emotion at the door. So Tony, I'm sorry for making an example of you. He had a Tesla contract. He said, what do you do? I said, I have 1 right now, and I paid $13. And when I announced it, it was already $12, and then it was $10.95. So I announced it. I'm down 30%. So what did I do? I announced I bought a second one at $7. At the same time I announced I bought the second contract for $7 or $700, I looked, and now it was $5.50. So not only did I lose from the first and the second one, but I said to myself, okay, I know what I'm doing. I'm looking at Tesla. It looks like it's going to bounce. So I bought 2 more, again, for $500 each. So again, I was completely in for $3,000, and I ended up making $600 on the trade. But Tony got nervous, and he said, how do I get out of this? Should I just take the loss? And I said, if you're that scared, take the loss. It was still like $750. He was going to lose $250. And he ended up, what did he do? $615. And then he could have held, and it would have back to like 10. The point is, you have to zoom out. You have to just open your eyes and zoom out. If you watch a stock, especially minute by minute, you're going to make yourself crazy. And I think that's what I told him. You're going to be emotional or else you're going to make yourself crazy. That's exactly it. If you're staring at the screen, watching every tick, hoping that it ticks higher or hoping that you get a spike on your stock, you're going to make yourself crazy. You don't need to do that. If you watch the lesson, just subscribe for like a week. Read my lessons. Read my rules. All right? But plan ahead. So pre-market, you only have a couple positions you go, and you could do multiple plans, right? So let's just give an example real quick. Let's go past Tony. I don't know if I have another slide, which will just be me, which would be great. No, I do. So I entered into a position. hopefully I remember that. I entered this position, just me being transparent again. I added this one to the spreadsheet. I think I did. No, I added my other SRA to the spreadsheet. But this is a position, in all transparency, the stock was $8.53. I paid 54 cents. So basically, I'm just leveraging it. I'm taking the $8 and putting the $8 to the side. I'm saying, I bet from 54 cents tomorrow, it goes higher than lower. And that's only because I see in the demand. Now, if the volume is poop, if the volume stinks tomorrow, I'll probably lose money here. I'll probably end up selling, to lose 14 cents. However, so that's the downside. If I'm wrong, I lose 14 cents, okay, which is, like 1/4, 1/5, something like that. If I'm right, the stock goes $8.88, and I get $88 per contract. So I make $34 per contract, which is well over 60%. So again, it's risk versus reward. If I'm risking maybe 15% on the downside, and then my reward on the upside 60%, and I'm right most of the time. I'm right 72% of the time when it comes to options, just based on facts. So it's a good risk for me. You get more on the upside, get less on the downside. Let's go to the next position. All right, transparency again. So yeah, I mentioned it's not an alert. I did give an alert out for SRNE, but I bought the May 7th options, and that's the most I can tell you. If you're part of my platform, you saw the alert. If not, you just know that I like the stock. All right, let's go on and see if we're done with these. Oh no, okay, SPI Energy. Here's another lesson, okay? So look at the bottom, all right? Look at the bottom of the chart where you see the green and the red. There was heavy selling in the morning. Now you see it went from being negative on the day to up 5%. And you'll see that there wasn't heavy. No, let's go back, please. There wasn't heavy volume. So what did I do? I sold my position. It was just a stock only position. And then someone said, why did you sell it? It didn't hit your price target of like $10.50 or $11. I think it was $10.50. And I said, I sold it because this position's been red for so long. And now it spiked 5% on a market day where green energy was kind of getting beat up. So I said, you know what? Let me leave this. I closed out that stock position. I made 2% and we're done. All right. Let's just move on. I just want to show you guys the alerts. I want to get to a couple other things. Okay. So yeah, TRIT, here's what I did. And I spoke about this one for 2 days straight. And now that it closed at $8.15, I planned ahead on the open. I thought we might get a spike. I wasn't really sure. I sold my TRIT position for May, my options. I had 8 options. I sold them for 84 cents or $84 per contract. I planned ahead. And then the plan was when it dipped, I was going to buy some. Now, I almost bought some June options. So I was buying myself the extra month. But when I went to buy June options, I would have had to pay $95. So I would have had to pay more than what I sold them at. So I said, no, that's not the rule. The rule is an even exchange, and you buy the extra month for free. So what did I do? I waited till it went down. It hit $7.40. Now I have stock. I own stock, so I wasn't happy it went down. But I was happy it went down for the options because I put in my order at 80 cents or $80 per contract. And I bought 8 contracts. So I bought 8 contracts. I got 84 cents or $84 per contract. When I sold them, I bought them for 80 cents. So I got $4 per contract. I made $32 basically. I mean, it's not killer, but I made $32 and I bought an extra month for free. So there's a lesson right there. If you sell at the peak and you buy at the dip, it doesn't matter if it's stock, options, whatever it is. So options, I just told you how I extended, got the free month. In other options that are more risky, more volatile, move more, like let's say you have a Riot or a Mara or Bitcoin related, you might only be able to buy an extra week, not an extra month. But in this case, TRIT, it's a lower volume option, so it's just every month. So again, sell on the peak, buy on the dip. Now again, you could do that for stock. If you have stock and it spikes, like OCGN spiked to like $12 today, I would have sold. I don't know where it finished at, but then I looked and I saw it was like 11.80 going down. The market was tough at the close. The market spiked around 3 and then started to deteriorate a little. Again, sell. It's okay to take profit. Actually, it was 12.25 at one point because I was like, I saw a huge wall. So if you're watching a stock and you see a huge wall, you could sell. If you say, wow, someone's got to buy this huge wall, the stock's probably going to go down, especially if the market sentiment's bearish or if more people are selling or there's no demand or no volume. You have no reason to believe people are going to buy your wall. So let me get rid of that last slide. Let me just get rid of that slide. There we go. All right. So my point is, here's my point real quick. So with Carnival, somebody kept putting in a little wall. So I was like, shit, there would have to be volume. So when there's volume or an active market day, right? Somebody will come and they'll buy 5,000 shares, and they'll buy 10,000 shares, and then people see it and they go and they buy it, and then the U curve starts to go up. However, today when volume was so light, it just no one could do anything. So no one wanted to get involved with whatever stock it was. I was watching Delta Airlines. I was watching a couple of the casinos. I have a bunch of trackers, but no one was trying to push anything. There were a few select stocks that got pushed, like Amazon. I don't know if they reported after hours, but I'm assuming they killed it. Amazon, Google, Apple, they're all killing it. These are companies that make a lot of money. Facebook, okay? So my group, we got on Facebook at 300. I bought more at 297. I had some at 307 was my initial position. I don't care if it took like a month for Facebook to spike up to 330. I think Facebook's going to $390. That's my price target. It implies a 30% gain. It'll probably be like 5 or 6 months. That'll happen by like September, October. The point is, have a plan, have a strategy. Anytime you make a purchase, if you make a purchase and you don't know what your exit price is, that's not investing. Meaning, I don't care. Say you're in meme stocks. Say you're in AMC. That's great. You're in movie theaters. You like it. But what's your exit strategy when AMC hits what? $15, $18, $20? If you tell me $1,000, then you really need my help because it's never going to 1,000. It's not to the moon. If you're in GameStop, okay, now some people like GameStop and GameStop moves, and the guy, what was his, something rabbit, he doubled down his position, so now he has 200,000 shares. My position on GameStop, I don't have one, but I think it's worth $60. The point is, if you're involved with GameStop or whatever stock it is, let's say you're involved with like Sundial or Tilray, have a plan. Know when you're going to sell it. If you're involved with Bitcoin stocks, all right, know when you're going to sell it. I'm going to sell it on the spike. I'm going to buy the dip. So if you follow some stocks and it goes up and down. Now, I know somebody follows PayPal, somebody follows Uber. I teach a lesson about making a stock your family. I've mentioned this one before. I traded Wynn Casino. I traded it 83 times last year for 2,500% profit. So somebody likes to trade Uber and knows that it's going down all the time. And then somebody likes to trade PayPal and calls every spike. It's only like 2 days in a row, but I think she's made a return of like 92%, 85%, something to that extent. So it's crazy. So I think I talked about my slides. I think I talked about my platform. I think I'm going to get to your stocks. Yeah, options. I spoke about the rules. This is great. Again, so this isn't really scripted. I have certain things that I want to get across to you people that I want you to learn that I think are important. So let me just unscript it again. Most important, if you get nothing else from me, all right, even if you've been with me or if you're new, entry point. Entry point's most important. If it's stock or options, this is the most important part of the video, okay? That and how you invest, all right? If you have $100, $1,000, or $5,000, whatever, it doesn't matter. Take 25%, and that's your first investment. And then don't worry about how you're going to average down. We don't guess. All right, my platform, we have specific rules. You average down on stocks 10% down. So I'm giving a free lesson here. You buy a stock with $10. It goes down to $9. You can buy your second position. It goes down to so you take your average. Your average is 950. Sorry, I got confused there. 950. It goes down another 10%. So from 950, it goes down 95 cents to 855. That's when you buy your third position. Then guess what happens? It goes back to 950. Now, instead of being down 5% from $10, you're now up about 7%. So that's how you average down correctly. You follow the rules. You leave emotion at the door. You don't worry. You use a calculator. You don't know math? Great. I don't care. How much is your stock? $143 times 9.90. That means it went down 10%. All right. So let's go on. Let's pick some questions and stocks from you guys. I know you guys have stocks. All right. Hey, Matt, when you do options, why don't you do covered calls and then you gave me a stock? All right, why don't I do covered calls? I like max value. So when I pick an option and I buy calls for the option, I don't want to limit my profit. Okay, what's a covered call? Let me just explain it to everybody, okay? I mean, there are two ways to do covered calls. There are call spreads. Okay, covered call, I own stock. I own stock in something. I have to hold on to the stock, 100 shares. For every 100 shares, I can sell an option. That's basically it. I'm selling the option instead of buying the option. For every 100 shares. Why don't I like them? Because I have to hold on to the stock forever. And I like to day trade. If I don't like to see something in stock, I'm going to remove it. So I'm going to start looking at stocks. I'm going to tell you guys exactly what I see. Please ask questions. You can ask any type of questions. You can ask about stocks. Now, if you want to ask about a stock, please, you're more than welcome to tell me what you're thinking about the stock. Hey, I've been following this. It looks like it's moving nicely. I'm scared that it's going to do this. I think it could go as this, $68. Tell me what you're thinking. Let's make it more, more creative, more informative. CSPS. And everybody, please, you're more than welcome to join on. When I open a stock, the first thing I look at is the 1 month chart, and then I look at the 5-day chart. So if you want to look with me and you want to see what I'm seeing, I'll just simplify. All right, I'll show you exactly what I'm showing. All right. Oh my God, CSPS. You're talking about, it's telling me custom proton. It's an over-the-counter stock that's a penny. So yeah, what would I do? I would sell. I would sell it. I don't do penny stocks. Why would you want to put your hard-earned money in stocks? So really, everybody that's here, you have hard-earned money. You're working jobs. You're doing this. You're doing that. Why don't you want to be a better trader? You do, because you're here paying attention right now. But my point is, it's your money. It's important. You know, you should pay attention. Learn as much as you can. Anytime you have FOMO or jump into a stock or you're unsure about it, that's on you. You have to learn patience, learn planning. All right, let's get another stock up, please. Okay, TYME, your cost basis is 245. Where do I see this dog going? So my question for you is, did you enter into this one at 245? It sounds like you entered all at once and you probably didn't average down, or you entered into it way too high. The good news about this stock is it just needs a catalyst. The volume is so light. All right, so to give you guys an example, the volume on this stock today, TYME, was 1.65 million. The average volume is 11 million. So we're less than 20% on that one. Let's just move on to the next stock. That stock will have legs, but it needs some volume first. Okay. Well, we just did TYME. We'll do FRSX. I'm going to tell you what these stocks. Okay, Foresight. All right, Foresight is traded in NASDAQ. A lot of these stocks look the same, but let's just go down to it. Let's go to the 1 month chart real quick. Hey, Tony, how's it going? Okay, so demand's been building. Demand has been building since about April 9th, which is a good thing for your stock. Again, FRSX. If I were holding this stock, if someone gave me, so this whole segment is, if you give me 100 shares, whether I'm going to hold or sell, this stock I would hold. Volume's picking up. Today was so light, but if you go back, the last 5 nice demand days were more inflow than outflow. So that's what I look at. I look at the inflow. I look at the size of the volume. When I see peaks, they tend to run together. After 2 large peaks, say you get 2 large buying days, there's usually some retractment. So it's called consolidation. Anytime your stock goes to a new high, it's going to consolidate. Your stock goes up 20% one day, 10% the next day. Don't be surprised if they sell off 10 or 5%. We mentioned this the other day with MS or MVIS when it was at 28, and then it was at 26. Then after hours, it popped to 29. And someone said, "What do you think?" I said, if I had this stock, I'd be selling, because there's probably going to be consolidation the next day. And what happened? Not only did it drop from $29 after hours back to 26, but it went down to $20 that day, and that's where it closed at $20 and like 7 cents or 14 cents. Again, I make predictions. I try and follow the stocks. They're not on my watch list, but I have a thing for numbers. I just remember numbers. Just like instead of people's names, I call everybody, "Hey, bud. Hey, chief." Numbers I remember. Let's go on to the next stock, please. Okay, CCL, what's going on with CCL expire tomorrow? Do I have time to sell? Yeah, you could sell in the morning. They're not going to be worth very much. I don't know what they closed at today. I'm going to give you, since you waited, and since you asked, I'm going to tell you what they closed at. I think they probably closed around 10 cents, I'm thinking. That would make sense. Again, always make a guess. Whenever you're working with something, guess what the price is. Guess what the option price is. So when you're making a guess, it's almost like the Price is Right game show. Like, hey, how much is this tube of Afrin? Oh, it's $7.99. And then you go into the store and you see, is it $7.99? If it's $5, I'm going to buy 4 bottles because it's on sale. So when you pick a stock, you're like, hey, I haven't looked at Facebook in a while. I wonder if it's $300. No, it's not. It's $330. Okay, now it's a little overpriced from what I was looking to get in. So sometimes you people ask me about stock, and I look and I'm like, I think the stock is an $8 stock because that's how I remember it. And the stock's at $32. So I look at it and I'm like, oh, it's $8. Why can't it be? All right. So the Carnival options, we're going to see what they closed at real quick. And if you don't have a Carnival position, I apologize. But these are calls and these are 28. Yes, they closed at what, 9 and 10 cents. So here's what I'm doing. You have 2 options for your Carnival options. All right. Sorry. I'm sitting here in like these heavy lights. Okay. 2 options for Carnival options. One, you want to get just out of the position. Okay, if you wanted to do that, you probably should have sold today at 19 cents or 18 or 14 cents when it was going down. All right, but say you're still locked in, you couldn't sell because you would have been day trading restricted or something like that extent. So tomorrow morning, pre-market, you decide to sell your options for, you put in a number like 15 or 16 cents. So if it spikes at open, someone's going to buy your options for 16 cents. Now they're only 10 and 9 cents now. So 16 cents implying a 60% gain. Now I understand you probably paid more for them. I paid more for mine. It's about getting the max value out of them. All right. The second option, which I'm doing, I'm letting it fly. Okay. I have 114 contracts. They're worth about 10 cents each. So that's what? $1,140. So I can take the $1,140, or I can follow the thing I told you and maybe take out like $1,400 or $1,500 out of it. Or say Carnival spikes 6% tomorrow. Just say it does, right? That's like $1.35. We look where it closed. Where did it close? All right, add $1.35. Now you'd be at like $28.56, meaning my options would be worth 56 cents. So I can sell maybe pre-market. I put in an order to hopefully get like an extra 6 cents, or I hold, take a chance. My downside is I'm losing the 9 or 10 cents. The upside is I could get 42 more cents than if I pre-sold, put it in the market, and that might not even happen. So if I can't sell, say it doesn't spike at all, and it doesn't go to 16 cents, you're not going to sell your position, and it's going to go worth zero. So my option is I'm holding because the upside is a lot greater. And we saw it spike a little after hours, 20 cents, 40 cents. Again, it was heavily manipulated today. I'm having those guys leave, or somebody else takes the other side and pushes it hard. I've seen Carnival move 10, 11% in one day. So again, I don't know what the market's going to do tomorrow. It really messed me up. I don't know it surprised me today that they played such games. Volume was so light. So if you tell me tomorrow volume is going to be so light in the market, then I would tell you try and sell your options early. That's for anybody. For anybody's options, unless you have puts and you think the market's going down. If volume is really light, it's hard to push the market or push any stocks. All right, next stock, please. All right, opinion on Sens. They create, this is perfect. I love that you're sharing extra stuff. They're antibiotic monitoring systems. They have a new product, continuous glucose monitoring system. They're under 180-day approval. Okay, the problem is if they don't get approved. So if they don't get approved, something bad will happen. But let me look at the stock. So anytime you have like FDA approval or something like that, it's tough. And then you hear rumors, someone says, oh, this is life-changing. This is great. I'm going to tell you a quick example. TRVN, Trevenia, right? They had this drug that's going to stop people from being addicted to opioids. So you would think it'd be a game changer right here. Every hospital, they inject it intravenously, right? So you don't have to take opioids. You don't have to take the pills. You don't become addicted to the pills. It also works better. What happened to that stock? It went from $1.56 up to $3.21 and back to like $1.70. One day Reddit had some fun with it and pushed it to $2.25. But I checked it the other day. It was like $1.80. I don't even mess with it anymore. The point is, you don't know what's true about a stock or what you don't, or what's not true. Sorry. All right, so let me look at the stock real quick. So I'm looking at the stock. The chart looks decent. I would be wary, okay? So I don't know if you guys can see this, okay? So it either looks like a crown, all right? Now, if it looks like a crown, it could spike higher, which would be great. However, volume is so light. So you have to give me days with volume. The last day that I saw with volume took the stock and pushed it to about $2.10. And since it's been wavering. So I would be probably holding. It's cheap enough that I wouldn't want to sell. It's so close to the bottom, okay? It's risk versus reward. So the downside is you hit the year low again. Well, not the year low, but you hit the low within the last couple of weeks, which kind of seems like it was like 180 something. So the downside might be like 15%. Your upside could be 50 cents, could be 25%. So it's always risk versus reward. So any stock you're looking at, just look at the chart, okay? And draw a line through the bottom going across where you're at now. This is a real simple lesson. Anybody could do it. Look at a chart. Look at like the 3-month chart. Do a line across the bottom. That's how low your stock can go. Obviously, they call it support. So just a real easy lesson. There's a support line, all right? And then there's a resistance line. The resistance line is what they call it at the top, the ceiling. So when they say head and shoulders, it means it goes up and down, up and down. Charts do this every day. There are dips every day. But look at any chart, any stock that I'm not talking about. If you want to take your portfolio, and I teach a lesson about reevaluating. So look at everything every day. But you look at it and look at your stock and just look at the chart. Look at the 3-month chart and say, how high can it go? How low can it go? And then you figure in, do the math and go, okay, if it goes low, I can lose 20%. If it goes high, I can gain 50%. And then you decide how it's tracked. Well, it's green energy, so it'll track with energy. So as long as people are talking about green energy and green energy is not being beat up, it has more potential upside. It's like if you have DraftKings, you look at what the upside is. If people are talking about gaming stocks in Las Vegas Sands and Penn, what it used to be Penn National, but Penn, the casino, right? Then it could go up. So that's my point. You have to look at specific industries. Like casinos are great. The airlines are going to be strong. The cruise ships are going to be strong. Again, movie theaters might be strong as well. I don't like AMC. You saw what happened, right? They were going to offer 500 million shares at an offering. And then what happened? They can only offer 43 million shares. And then there was another company today. Oh, it went down the most after hours or something like that. It went from $1 down to nothing. I'm just going to tell you because I was reading the message boards and people were like, I can't wait till Monday to jump in this. Okay. So FAMI, this is my stock, FAMI, right? Look it up. It's called FAMI. So what happened is the stock was like $1 or something pretty high, close to that for them. And they did an offering. They're offering 100 million shares at 30 cents each. 100 million shares. So the stock went down to 36 cents. So if you can short this stock, I'd be shorting it right now. You remember we speak about that? Dilution is never good. They're offering 100 million shares at 30 cents each to get $30 million. Now, what if no one buys it? Remember what happens in the other offering? No one has an interest at 30 cents, hypothetically, because it's a piece of shit company, just for example. And they go, okay, instead we're going to offer it for 15 cents each. And then what's going to happen? The stock's going to go down from 36 cents to 15 cents. And the people still think they can't go down any lower. We saw it with QS. I said, whatever the offering price is, we saw it with Plug. Whatever the offering price is, don't think you're locked in. They could change the offering price. Futu did that. FUTU. It was $175. Huge demand, heavy volume. And then what happened? They did an offering. It was $175. They did an offering at $163. So the stock went to $163. Then they said it was a $150 offering. Stock went to $150, then went under. It went to $135. We're all saying, what? The offering's at $150. No, they changed it to $130. They changed it 3 times. The stock went to $130. And then it bounced, like it said, it was going to bounce hard. So it went to 150. Today there was a drawback, 146. Okay, Yeti. I don't know yet. So my point is, if you look at this one, FAMI, just look in the message boards. Have a quick laugh at somebody else's expense because they're going, yeah, I can't wait for this offering to close. This stock falls off a cliff. You should see it. All right, let's look at the next stock is Yeti. So let's open it up. YETI. I'm going to read what you said as well. Stock's been moving the last month. It's an all-time high. Do you see it reaching 100? Okay. Demand's been extremely low since it reached $88. So it reached $88 on April 15th. It's still at $88. So if you're following along, Yeti. Demand was good for 2 weeks. Let's go to the 3-month chart. Again, I don't know what they are, but people are picking this up. Demand's good. Demand was strong from $70 to $81 to $88. So I don't know what they do. Could it reach an all-time high? So yes, it could reach an all-time high. It could reach to 100. So I did a study in college once, right? So I did a study, and I basically tracked 45 stocks that reached all-time highs, and I tracked them 2, 3, 4, 5 months down the line. And most people think, oh, all-time highs, people sold. No, when they reach an all-time high, if you hear a stock reach an all-time high and you check it the next day, it's probably even higher. There's a stock like that right now that I wanted to give out at $65. Then it went to $74. Then it went to $81, $82. I even mentioned on here at $84. Look it up. It's probably like $95 right now. STX. You want to look it up with me? I'll look it up. STX. Seagate. Oh, my God, $96. So, yeah, I saw demand pick up at like $72, and then they announced earnings, and they missed, and they sent the stock to 65, and I was like, oh, but the demand is there. The demand is there. And I didn't buy it. Then I went to 72, 74, 77, 87, and I'm thinking to myself, should I buy it 84? And I didn't. And this is for an example. STX from 84, it's at 96, almost 97. And if you look at it, the demand is off the charts. So I get that it moved from 80 to 96 real quick, which is 20%, but it's moving. Let's go to the next stock, please. Palantir. Okay, so Palantir is interesting because Palantir is like more of a money play. They call it the Amazon for like Africa, and it's underdeveloped. And once it gets developed, it's going to be worth so much money. So yeah, I mean, long-term play, if you're picking up Palantir, you could pick it up every dip, and then eventually you could sell little by little. So if it dips 5%, you pick it up that day, you pick up 20 shares. Now, we're not talking about you have to use a large account. You could just pick up, and you could do this for any stock. Say you want to own Tesla or Apple or Disney or any of this, but you don't have a lot of money. You buy one share on days that it struggles. Whatever day it is, like Disney dropped, like 15 points one day, you buy a share. You buy another share if it goes down. And then if it goes up, you don't have to hold 2 shares forever. You could sell one of those shares and make a quick $30. Again, every little bit counts. Somebody's laughing, $30. That's what he's telling his followers, to make $30. No. You do it over and over again. You do it 1,000 times. Make that same $30. Make a trade 1,000 times in a year. That's $30,000. Let's say you have a little more money to start, 500 instead of 100. Now, every time you're making the trade, you're making $100. They do it 1,000 times in a year. It's $100,000. Now, imagine you actually start understanding and getting better at this. These are the goals. So people say, oh, these are crazy. I had a small account challenge. I took $2,000. I turned it into $6,000. I had a bad day today, but I'm still hovering around like $4,500, $4,600. It is what it is. I'm actually thinking about taking the money out, starting with $2,000 again, just to show you guys. Listen, it's not hard to double your money. Follow the rules. Here's what we're going to do. Okay, so Palantir. Sorry to get sidetracked. I do that. I'm looking at the 1 month chart. And again, volume's been kind of poop for the last 5 days. There looks like demand, but that was the market rebounding. So, I mean, I'm in the stock. If it spikes above $24, I might actually get out for the time being because the chart looks terrible. So I like it. I gave it out, and now I'm actually looking at the chart, which I don't get a chance to do. I don't reevaluate my positions. I wish I did as much as I preach about doing it for you guys. So I might actually get out of Palantir. I know Kathy Wood's in Palantir. Now imagine something happens and the market goes down, right? What's going to happen? Kathy Wood's going to sell. What's it going to do to Palantir? You know how many millions of shares she has? So anytime you get involved with an ARK stock, it's great until she sells. When she sells and she doesn't tell you, like she did with Roku when Netflix went down and then she bought Netflix, she drove Roku down, bought Netflix, which I think is worse than Roku, and is trying to push that up. Hopefully that's under $500. All right, let's go to the next question, please. Rito. God, I wish I used to know stocks all the time. Okay, is this why is it so cheap? You guys love cheap stocks. Unfortunately, with cheap stocks, so the volume with this one was 123,000. All right, the average volume is 5 million. So you're like 1/50th the volume. You're 2% of the volume. Anything can happen. So I talked about manipulation today. If you're 2% of the volume, say on average, you know your stock trades like 1 million, and you're trading 20,000 shares. That's ridiculously low. You can't buy or sell without forcing the stock to move and without making the stock look great. If you want to buy 5,000 shares and 20,000 is all that's traded in the day, you're buying like a quarter. I mean, it's just ridiculous. So this stock trades for $1 and it traded 123,000 today. No, I don't want to be in a stock like that. It only has 100. I could buy the one position today. I could force that stock up. I could then sell it and force it down and make it look like it's going bankrupt. They have a market cap of $28 million. So anytime you're doing that, it's extremely risky. These kind of companies somehow get listed. $28 million is not a large. I know companies that make that much, and they're private companies, and they don't even make that much money off $28 million. So anyway, I would be very scary at that one, very weary. There is demand. Ever since it bottomed at $1, people like it. But I don't like risky companies. I try and teach you to avoid risk. I try and teach you to avoid stress, to avoid risk, to make investing mathematical so you don't have to guess, to leave emotion at the door. Don't get emotional about your trade. It's like when you're rooting for a team, if you're a sports team or you're playing cards, you can't get emotional. You have to play your best cards or root for your team. You know, if they lose, it can't ruin your life or ruin your evening. You know, I have friends that were heavy into sports betting, right? I was a bookie in college, but they were heavy into sports betting. I was the house. They were heavy into sports betting. They would lose and get angry at their significant other. Then they would fight and he would call me. You know, one friend, two friends. There's always a he because I'm a guy's guy, you know, whatever it was. Anyway, I was a bookie in college. You know why? The house always makes money. You know why casinos are great bets? Because they always make money. I beat the casinos, but that's not the point. If you're the house, if you're this, if you're a market maker, you're taking a little bit of everybody's trade. So that's how some people make money. Let's go on to the next stock, please. Okay, Torch. Again, I don't know why you guys find these stocks. These are all like FOMO stocks. Torchlight, Sundial, AMC, Nokia, GameStop. These are real companies, but they're not companies that have huge spreadsheets that you say, wow, this company made this much money. I guarantee Torchlight doesn't make money. TRHC, Torchlight, $2.32. Let's see if they make any money. And they do not. And they have no PE or no forward earnings. So anytime there's a company without a PE or forward PE, that means they're not going to make money next year. So if we're in a frothy market right now, what do you think is going to get beat up? Companies that aren't making money. Their valuations will get crushed. With that said, it looks like it bottomed at $1.50. It looks extremely risky right now. I don't know the company. The good news is if you're right and you like this company, yeah, it could revisit $3 so you can make another 20%. If you're wrong, however, then they're going to sell it right back into this gain, which means it's going right back to $1.50. So if you're right, it goes to $2.80. If you're wrong, it goes down to $1.50. 70 cents on the loss, 50 cents on the upside. Do the math. It doesn't make sense. You can lose 70 cents or you can gain 50 cents if you're right. Now, if you had asked me about this a few days ago and you told me you got in at $1.80 or something, then your upside is better. Your downside would be 30 cents. Your upside would be $1. You understand the difference about entry point. It's all about upside versus your downside. As long as your upside is greater, when they're even, then it's like a 50-50 trade. It's like a coin toss. All right? Now, if you're more right than you're wrong, then it's okay to toss a coin. All right, next stock. How do I predict the rest of the day, green or red? I generally follow a rule of thumb, which is 10:45 to 11:05 in the morning, whatever trading you see between that time. So you mark it at 10:45, you mark where the Dow is, you mark where the NASDAQ is, and at 11:05, you mark where the Dow is and the NASDAQ is, and then you see, did it go up? Did it go up 3 points, 5 points, 20 points? The reason you don't watch it in between is because they play games. These traders know exactly what I'm looking for. I'm not alone at looking at these times. I know where the volatility is. I know where the volume is. So that's what's happening during these times. So whatever happens between 10:45 and 11:05 a.m., if you watch, it's probably going to happen the rest of the day. So if it says the market's going higher, which it did today, even though we had this sell-off and it looked like the market was capitulating, where do we end up? The Dow ended up over 200 points, right? And the NASDAQ ended up. So that's what it was telling you. So it was telling you the good reason and how you use this information or process it. Here's how you do it, right? If you know the market's going to go up because you're following this 20-minute time zone, right? And you have money on the side, you wait for the market to go down. You go, okay, but he told me the market's going up. And I told my platform members 90%. And again, I like to put percentages on everything because that's my guess. That's my prediction. So 90% it was going to be green today. That's what I said. So when the market was capitulating, I was sure it was going to go back up, which is why I went so heavy on Carnival, because if the Dow goes up and you told me the Dow was up over 200 points, I would have to assume Carnival would be over $28. So that's what really confused me today. Okay, let's go on to the next stock, please. Jack. Okay, don't know Jack either. You guys pick out some stocks that I've never heard of. Like, where's Apple and all? Jack's Pacific. Okay, so Jack's Pacific, I'm looking at the chart right now. It definitely spiked, and it probably did that today. Yes. Okay, so the stock went up 24% today. What do I see for tomorrow? I'll tell you right now. There's going to be consolidation, meaning there's going to be a sell-off. So if you're in this stock, I'm not in the stock. I would be selling at market open. I'd be selling pre-market or after hours if I could. But there was heavy volume today, and every day that there's been heavy demand like this, and it's happened a few times on the chart, the next day's always been selling. So again, I've had stocks like this. If you have a stock and it spikes, just off any news, I don't know what it is, there's a good chance the next day it's going to go down. I saw it happen with TRIT one day. I saw it happen with Blink one day. I saw it happen. It happens. There's profit taking. There's consolidation. Consolidation means the stock went up a lot and it's finding a new baseline. So this stock, JAKK, Jack, went up 24% today. You go up after hours? Yeah, not really. So yeah, I'd be selling. I'd be selling this stock and I would enter cheaper. It has a nice chart. Don't get me wrong, but it also looks like it's peaking. So again, what I like to do is I like to take profit. If you take profit on the peak, you just got a 23% gift and you thought it might take a month or 2 months. If it happens overnight, say you're lucky and something moves 5 minutes after you enter into it. Congratulations. Take profit though. It's like I used to go to the casino and I would make like $12,000. I'm like 10 minutes into it. And my buddy's like, hey, let's go. And I'm like, no. And he's like, you only came to make 8,000. I'm like, yeah, I'm up 12,000, dude. It's only been like 15 minutes. And you know what happened? I lost 18,000 that night. The point is, if I go with a plan, to make $8,000 and I'm up 12, I accomplish the plan. I don't care if it takes 1 minute, 5 minutes, 10 minutes. Your trades are the same way. Understand that. Have an exit strategy. As soon as you enter into position, you should know exactly how to exit out of it. I'm not saying you want to. You enter into a stock or option position because you're excited about it. But know when you're going to exit. I had Riot options. I bought them at $4. They went down to $2. I said if they go above 4, I'm going to sell it. Then it spiked one day and they went to $5. I sold them at 4.80. So I made what, 80-cent profit? I made 20% profit on a position that I was losing 50% on. But I was happy. It was profitable. Again, if all of your trades are profitable, if you make this trade profitable, just repeat. Take the profit, repeat. Okay? Once you get better, your timing will be better. But if you're new at trading and you found something, please just repeat. Okay, let's go on to the next stock, please. Let's see what we got here. It is ATOS. I feel like we just did this one. ATOS. Sounds like another pharma. Yeah, therapeutics. Again, it's another $2 stock. The one-day chart looks good. I mean, it looks like it's, you guys love this forming a cup and handle, but one day you have to zoom out. So by zooming out, I'm looking at the 1-month chart right away. And you know what? Volume actually was superior today. It was superior yesterday. It was superior today. So I don't know what the news is. Maybe it's a big short play. Maybe there was news. But again, if there was a real catalyst, they came out with a new product of some sort. They came out with a new solution. They got FDA approval. Then yes, the demand was there. The chart looks good. And it looks like this stock could go above 3. And it's at 232 right now. So 70 cents is at least another 30%. So again, this stock was ATOS. Do your own due diligence. I'm not a financial advisor. My point is, if it's not a short squeeze for some reason and there was news, yeah, for 2 days in a row, it looks great. And remember, yesterday was red. Today was a little wishy-washy, but there looks to be huge demand here. The one-day chart looks great. They sold off in the morning like everybody else, and it had a nice cup, a nice U rebound. So if I was to be told, hold this stock or sell, I'd be holding. I'd be asking for more. Please give me some more. Okay, OPTT. Why does this seem like it's going to be a $2 stock as well? Understand, if you're a new investor and you don't have much money, it does not mean you have to go into a $2 stock. Say you have $600. You can go into a stock that's $100. You just buy one share. If it goes down, you buy a second share. If it goes down, you buy a third share. You could buy Apple. Something like that. If you like the company, you could buy Disney, share of Disney. Say you just came back from a family vacation, buy a share of Disney. $180, $170, something like that. OP, sorry, I do get sidetracked, and it is late. OP, and I appreciate you guys. I really appreciate you guys watching. I mean, this is crazy. Okay, so it's a power technical company. The 1 day, which is what I open up, it looks decent. They all look the same. The 5-day volume was dead today. Volume was dead yesterday. There was good volume 3 days ago, and it went down. It's definitely a volume-driven stock. They had 1.2 million volume. The average is 4.5. Market cap. Again, this is a low float, low market cap company. It's obviously a power play tech, probably a green energy play. And again, if anybody missed it, OPTT there is on the screen. I'm going to look at the 1 month. That's going to tell me real quick. It bottomed with green energy. So if you've been in this for a while, you've probably been struggling since $3. You're probably still down about 17 or 18%. If you're not, if you got into it around 419 or 420, yes, you could ride this higher. It's like, say you pick the best entry point for NEO, for Solar, for Blink, for XL, for Plug, for ChargePoint, for any of these stocks. If you got in on that dip, if you get in on any dip and it looks good, it doesn't matter if it's stock or options. It's all about the dip. So again, just going back, if you missed the beginning of this presentation, please watch it again. We spoke about Delta Airlines. I spoke about Delta Airlines. Somebody missed it and it peaked, and then they planned for the dip. It went down. They bought some. So even though it went down at the end of the day again, that person's still like 3 cents down. So it's like 1% maybe. It's like nothing. All right, let's go on to the next stock. Let's see. Here we go. Do you sell stock to pay federal taxes or who? Okay, that is something you want to ask your accountant. I do not give accounting. I took accounting in college. That was the most boring thing ever. I got an A in it. I would never want to be an accountant. I don't like accounting. All right, so let's move on. And sorry, I don't answer tax questions like that, because what if I gave you the wrong information on a tax question? Okay, it's crazy. Okay, yeah, EDR. I know who that guy is. I have friends of friends. You know who made out on the deal? The guy that actually sold Dana White got like $4 billion or something like that. So EDR, yes, they came out. They're bringing the UFC public. The UFC is probably going to be huge. I like watching the UFC. It doesn't mean their valuation is correct. So again, I would be very careful with that. Spotify, I don't know. Okay, IDEX. Okay, I saw that move. Maybe it was today or yesterday. We'll see what happens, but there should be some good movement there, and hopefully I can share what I'm seeing here. Okay, so yeah, it was that's right. It was the other day. It was like, yeah, again, the 19th, when everything kind of like fizzles out. There's been buying and there's been demand, but it's extremely light. The selling going into April 19th was a lot stronger than the buying that we're seeing right now. However, it's made a nice move, but it's been just over a week, and you're looking at a gain of probably 70 of like close to 28%, right? Yeah, I mean, 5 days of 17%, sorry, 18%. That's a strong move. So you got to be careful, because anytime there's a move like that, and then there's light volume, which again, I can't tell you guys enough, there's such light volume in the market. That's what the problem is. So anytime there's light volume and they're selling, stocks go down a lot easier. So your stock can make back, I'll take Carnival, for instance. It made back today. It was moving at one point and it picks up, and it was like, I'm like, okay, they're doing the recovery. It's like 40 cents, 50 cents, bump, bump, bump. And then all of a sudden it got hit. And they took away like, the 40 cents like that. It was like, 40 up, 40 down. I was like, I know it was at 88 cents, something 88. And I'm like, okay, it's recovering. And then all of a sudden it went from 88 to 74 to 70 to 67 to 64. And I was like, okay, well, I know where it's going. I also think it's going back tomorrow, but that's the point. Okay, let's go on to the next stock, VXRT. I'm pretty sure this is the NFT stock, correct? So NFT stocks seem to have replaced Bitcoin stocks. So just real quick, you guys know I love Bitcoin. I still think Bitcoin is great. The market's struggling right now. So there's the interest rate. There are tax questions on Bitcoin. Cryptocurrencies took a hit from India, from Turkey took a hit. All right. And then the stock market and other markets are struggling. And we're still in a pandemic. So if you think crypto is struggling, it's at a hesitation point right now. But they're playing around with it. So the new crypto, or the new, great stocks, it's not Bitcoin anymore. It's not Bitcoin farmers. They're changing it to NFT. They're changing it to Dolphin. They're changing it to TKAT. They're changing it to VXRT. So again, yeah, I knew this chart was going to look pretty decent. They sunk the NFTs. They took all the profit away from them. And since probably, let's just look, let's see what the date is here. Yeah, like 4 days ago. And again, it was Diplo. I saw Diplo went on CNBC, and then he started talking about NFTs, and he has a company, and then somebody else started talking about NFTs, and then there were baseball cards, and they were talking about this. So that's what's making the news these days. So VXRT, I would be owning it. I wouldn't be buying because I don't chase. I mean, you're talking about a stock that was just $6 3 days ago. Now it's $9.21. It's up 50%. So that's true with any stock, people. If you're following a stock and you're like, boom, look at this one. If it's up 40 or 50%, it's great if you got in before. But if you miss that gain, you could be in trouble. You could get in and you could be a bag holder. Everybody else is selling. It has a bad day, and people are like, oh, I'm just going to take my 50% profit. By that time, they're taking 40%, and you bought in at the top. So you're down 10%. They just took 40% profit. You guys are sharing that moment about stock. Hey, VXRT, and you're like, yeah. And that dude's like, yeah, I love that stock. I made 40%. And you're like, dude, I'm a bag holder. I'm losing 10%. What do I do? So again, take profit. VXRT, everything has a dip. VXRT, Dolphin, TKAT. These are the popular stocks right now. And again, NFT, someone said, what's your favorite one? I don't know. If you guys can research it, and you pick the strongest, it's like being the Amazon or Google or Riot or Mara. Even though those stocks are struggling, it's being best in class. So if you tell me which NFT play is best in class, which has the biggest base structure, which can build platforms for records, for cards, for this, for music, for artwork, what's got the biggest outlay so they can reach China, Japan, where all the money is, Russia, all the places where people want to spend money on this ridiculous artwork that's tied into a little chip or something to that extent. If you told me there was a company that was just so ready to just explode on everybody, that's where my money would be. All right, with that said, let's go to the next one. XXII. Somebody mentioned this the other day. I saw it explode the next day. So again, I don't know if I'm going to be able to comment on this one. I saw it moved. Yeah, so it moved, and then they had a huge pullback. Again, the stock just lost 88 cents today, 15.6. All right, I'm on 20%. So what either happened today? You have two things that could have happened with XXII. So you should watch it carefully. Let me just go to the 5 days so I can give you quite a range. So it either consolidated today, which means it had a good run for 2 or 3 days, and then people were taking profit, and it's finding a new baseline. I mentioned consolidation a few times. Or the second option is that it's really not good. It spiked for a little bit and people are taking profits. And what you'd expect the next day is more of like a downward circle, a half moon down. So I'd be cautious on that one. But if you're in the profit and you're playing with house money, it's okay to take some house money off the board and go forward with a smaller position. And if it goes down, you can act as a support and buy more if you want. Or if it goes down, you could just think that you're smarter. Good thing I removed 50% of my position off the table and secured more profit. All right, let's go on to the next stock because my computer is actually dying. I've got about like 18% left. My phone actually has a lot of percent, which is great. But let's go on. Okay, NIO. Okay, so NIO, did they report earnings or something to that extent? I thought they were going to. Now, NIO, before I look at the stock, NIO, you have Tesla that just got beat up. You had XL that got beat up. You had Canadian Solar that got beat up. First Solar that got beat up. All these energy plays that got beat up. Again, that's why I was so happy to sell SPI because SPI, Romeo, all these energy plays, green energy, they're getting beat up. So what's NIO doing? I know there was demand all the way up to like $42. But again, you have to understand, when we were in it the other day, I was in it at $36.50, and then it ran all the way up to $43. So again, it's like the top of the peak. You think it's going to go up, but if you look at the chart, I'm sure it looks, yeah, here, something like this. So it peaked, and it's been working its way down, and then it dropped off the face probably today, right? Yeah, it dropped off the face pre-market. It lost $2.20, 5%. So yeah, before that happened, it was at what, like $42 probably, right? So again, wrote it up from 36.5. Those are the calls I had, all the way to like, I sold it before $40, but I knew it was running good. It went 41, 42. You're at the peak. Any stock's going to go head and shoulders. No stocks just explode unless they had numbers coming out and they were just going to crush it, and you knew they were going to crush it. Then you can keep going. Okay, I see somebody asked about RIDE. I'm just going to get to RIDE real quick because I heard people were shorting it and saying bad things about it. And yeah, I was afraid it might be around $10. Unfortunately, I don't think RIDE's going to move very far. Even when they try and move RIDE, it looks like it faces resistance. And that reminds me also of Fisker, because I saw a similar chart there, even though Fisker is doing a little better. Let's just look at Fisker. I know you guys didn't mention it, but I have Fisker in my portfolio, and it looks similar. I thought about pulling the plug on Fisker. So if you have RIDE or Fisker, I would give it a little more time. Your downside's limited. So for RIDE, you might put a stop loss in at 50 or 60 cents and might make it a trailing stop loss. So just to explain that, say, let's go back to RIDE real quick, and I'll just tell you what I'm saying. And this is a lesson for anybody, what a stop loss is and what a trailing stop loss is. Okay, so you have RIDE, which is $10.21. So you put a stop loss. A stop loss means that you don't want to lose more than 50 cents from where it is right now at $10.21. So you put in a stop loss at $9.71. So if it triggers and crosses $9.71, you're selling. You know the most you're down is like 5%, is 50 cents from where it's at. Now, what happens if it goes up? Say it's at 10.21 and it goes up to like 10.56 tomorrow, right? You can still do the same thing. You just move your stop loss up at 50 cents from wherever the price is. So if it goes up to $10.56, you can put on a stop loss at $10.06. So if it goes past $10.06, gets triggered, you're limiting your exposure. You're limiting your loss. If for some reason it goes up to $11, again, move your stop loss up to $10.50. That way, if it loses that 50 cents, you're still securing profit. It's a safer way to secure profit. I don't do stop losses because when I enter into a stock, I always have a price target. Now, I will sell like SPI before my price target because, again, SPI, low volume. I just wanted to get rid of it. I was in profit. It spiked. I took advantage. After I sold, it went to $7.30. I sold it at $7.21. The point is, I mentioned I'm selling stock. I'm not a guru like this. I sell a stock at what I'm happy with, at what I'm content with. When I put in the order, if it sells and executes, I'm happy. So when you're putting in an option order, if it sells, you should be happy. Even if the option goes up even more, beggars can't be choosers. You can't be greedy. You just don't have to look at your computer. You do something like that. All right, it's quitting time, everybody. I'm going to look at the last stock, and then I'm going to thank everybody for coming, and we'll do it again tomorrow. Plus, my reception sucks here. Maybe I'm going to do it in the office tomorrow. We'll see. I'm sorry for the stutter and everything like that. PIXY. All right, shift. Okay. I mean, wow. I don't know. Is this an NFT play? Is it PIXY? Is it an NFT play? I don't know. But it had a major move today. It traded 70 million, and the average is 2 million, and the shares outstanding are 21 million. So How do you trade 71 million shares if there are only 20 million shares available to the public? All right, so think about the psychology of trading real quick. 20 million shares, yet 70 million were traded. That means shares swapped hands 2 and 3 and 4 and 5 times. Meaning, if this little thing were just an actual physical share, I sold the share to him, he sold it to somebody else, and then I might have even bought it again. Shares were swapping hands. So it's a momentum play right there. A lot of people are looking to scalp. When shares trade hands, you only have, let's say, 21 million shares and they trade 70 million. How is that possible? The shares traded hands 3 and 4 times. Some shares probably traded hands 5 or 6 times. The point is, it's not a buy and hold. It's where a lot of people were making money, probably hedge funds. All right. Hedge funds like the hot stock. Whatever's being talked about, say Kramer's talking about a stock, hedge funds love to short his stocks. All right. Say everybody's talking about NFT, hedge funds love to go full deep. They go in. When I tell you to go in 25%, they don't. They go in with tens of millions of dollars. And when the stock peaks and you're thinking it's going back to go even higher, that's when they start selling. They're selling their positions. They're securing profit. And what's going to happen is these NFTs move very quick because they're low floats. So when they sell a major position and take profit, you're going to get screwed. And I don't want you to do that. So yeah, I charge $3.49 a week. I'm trying to deliver that in content to you. If you like what you do, sign up, read my rules, read my lessons, read the psychology of trading, and read it over and over again. I say this to everybody, even people that DM me on the side, over and over again until it's intuitive. The whole point of my platform is to make you guys better traders. And really the whole point in my genius plan of it is to get 200, 300,000 people trading better and to disrupt Wall Street. That is the plan, to disrupt Wall Street. So if you like this video, please send it out to your friends. Tell your friends to watch it. Please share this. Pay it forward. All right? I don't ask for any tips, donations, anything like that. I charge $3.49 a week. Pay it forward. Share it. Tell them this great guy is free on YouTube. Thank you so much, everybody. Have a wonderful evening. I appreciate everybody's time. Thank you.